Chairman, before I get on with my main line of questioning, Ms. Benda? No? Oh, Mr. Benda, I'm sorry. Yeah, my apologies. Ms. Sanchez-Adams suggests that simply shifting losses from one party to another, what would this do in practice?
So I think we can see an example of that in the UK. They have a reimbursement framework that you mentioned. If a consumer is fraudulently induced of transferring a payment, they're liable to be reimbursed up to £85,000. So the hope was that this was going to greatly reduce the amount of scams and fraud out there, spur investment. What unfortunately has happened is that banks had already heavily invested in anti-fraud and anti-scam protections. Scam losses only went down by 1.5%. The challenge it would create for banks, though, here in the US, is not only wouldn't necessarily reduce scam losses, it would put banks in the uncomfortable position of trying to tell American consumers how they can and can't spend their money. We talk about sending, we don't want people to send money to someone they don't know and trust. By the time they're ready to make that payment, they believe they know and trust who they're talking to. We have countless stories where you can talk to a family member that couldn't convince someone not to send money. And now you're going to have a bank teller that's going to be responsible for making that decision. We don't believe that Americans want banks telling them who they can and can't send money to.
Okay. And while I've got you, Mr. Benda, I apologize. The Georgia Bankers Association brought something to our attention earlier this year. And as the chairman of the full committee, Chairman Hill, brought up, we've also in Georgia have had a big issue with check washing, especially through the post office, stealing of checks, and hundreds of thousands of dollars have been fraudulently stolen that way. And they brought up a scenario where the fraudster, the criminal, would go to a non-local bank and most likely using fraudulent identification would open a bank account, and that would pass the Know Your Customer standards. Then they would take these fraudulent checks and deposit those in that bank. But instead of the big bank putting a hold on the check, they're paying those checks and clearing them. Is that a problem that you have been aware of? Is this something that would be an easy fix of requiring the banks to hold the checks?
So check fraud is a very substantial problem that does not appear to be going away. We have a lot of challenges right now with fake IDs that are out there. If anyone has a college-age student, they know that it's relatively easy. AI is now allowing criminals to generate very realistic-looking statements from a utility company, from a telephone company. And so banks are really struggling with when the documents being used to open an account look completely legitimate, in many cases pass through certain verification procedures. So open up those accounts. So what we train banks to do is look at the age of the account, look at the holistic nature of what is being done, what is the pattern of deposits. And so banks would like more flexibility, quite frankly, on being able to hold those checks. Certain checks have certain timelines and when they have to release the funds, such as a treasury check. So we would be very open to having a discussion of how we could increase those hold times appropriately when fraud is suspected. And that is something our members would be very interested in.
Okay, thank you for that. In your testimony, you mentioned that criminals effectively took advantage of the economic devastation during COVID-19, especially the unprecedented government response to support small business and out-of-work Americans. How has the COVID-19 pandemic had a lasting effect on fraud?
Well, and I think Mr. Bednowitz mentioned that, the identity theft that's out there. And so let me give you the example. We talked about that trust issue that the scammers build. If you get a phone call that comes in, it shows the number on the caller ID of your bank, and they say, Mr. Loudermilk, is this you? Do you live at this address? Is this last for your social security number? Can I talk to you about some potential suspicious transactions on your account? The vast majority of Americans don't realize that all that information is out there, don't realize their phone number can be spoofed, that the bank phone number can be spoofed, and they're going to believe they're talking to their bank, and they're going to give up that information. That is the challenge that we face. We face a very sophisticated criminal adversary that's leveraging the loss of all that information and the technology available to them to steal from American consumers.
Has the pandemic actually helped create new criminal networks?
I believe so. What we've seen is the unemployment insurance fraud created that market for the personally identifiable information, but it also created a belief that this white-collar crime isn't getting enforced. So check fraud vastly increased after 2020. identity theft increased after 2020. These white-collar financial crimes have vastly gone up, and unfortunately, enforcement, due to lack of resources, simply hasn't kept up.
Okay. I see my time's expired, and I yield back.
Gentleman yields back. The gentlewoman from California, Miss Waters, who is also the ranking member of the full committee, is now recognized for 5 minutes.